But first, we can bring you an interview that he did earlier, which was really interesting. He spoke to Peter Attard Montalto from Nomura. We often speak to him for a global investor perspective. So global investors looking in. He's based in London. Devon started by asking him what he made of South Africa's posture in the conference.
Well, it's quite confident. South Africa is obviously overrepresented here. There are a number of conflicting events in the diary, meaning a lot of other ministers from other countries aren't actually here. But South Africa is trying to, I think, basically sell the message that it's business as usual, in the sense of the reshuffle being a non-event, which I think isn't particularly going down well with people. I think there is a view then of why did it happen, etc. The court judgment that's just come out today will obviously provide more information on why the reshuffle has happened. I think that's the sort of slight disjuncture, if you like, and the question that's hanging over the summit, when there is actually a lot of positivity around places in the rest of Africa, particularly the east of Africa, where there's a more positive vibe here.
Well, let's talk about our new finance minister. He jetted into the position using the term radical economic transformation. Since those beginnings, we've seen that term slip away. Inclusive growth is being used now. What is that telling investors, and is that convincing?
Well, I don't think it's telling them too much. I think it says that he understands the issues of language are important as a finance minister. Certainly, that's the first thing to learn. But I think we're waiting for action. Basically, it's too early yet. With the MTBPS coming up in October, is going to be a key event when they will have to acknowledge first and then act on a fiscal shock that is coming, a growth shock as well that is coming to the economy. And so we're waiting for those actions ultimately. But there are other things beneath the surface that we're going to have to watch out for around procurement issues, procurement legislation in particular, where I think the party and the presidency are wanting to see changes and a change from the previous minister. But I think the problem with this whole narrative is it's going to take quite a while to play out, and that's why markets have been relatively relaxed so far.
All the time we look at ratings agencies to see whether or not that third downgrade on our foreign debt is inevitable. But I would imagine that local rand debt is the big one. We've had one from Fitch already. What's your thoughts on the future going forward as far as downgrades are concerned?
Well, exactly. We need two more notches on local ratings for Moody's and one on S&P. I think S&P will deliver that, maybe at their June the 2nd update, but maybe more likely after the MTBPS at the end of the year when they update then. And then it will come down to Moody's. I think Moody's does go a notch on both local and external ratings in their update that maybe comes out sometime in June. They're going to be in the country probably in the next few weeks making the rounds. But then the final step for Moody's is probably further away, maybe after the budget next year. But I think ultimately, if you're not getting onto a faster growth plane, if you're penciling in lower growth now, if you're still having grinding higher debt to GDP, it's going to be inevitable that you will end up in sub-investment grade, eventually falling out of things like Wigby. The question is, when do you get to that point of realization for the agencies? And that may, as I said, be a little bit further off for Moody's.
All right, I was talking to our public enterprises minister on a excursion of Transnet yesterday, and she was telling me that state-owned enterprises is where we will, would be used as a tool for this economic inclusion. We're going to give businesses to small business enterprises, and we're going to transform those state-owned enterprises. But state-owned enterprises itself, I mean, this is where the concern lies with ratings agencies. Our governance doesn't seem to be turning there, does it, Peter?
Well, I think that's the real issue that she has to address, is this trust factor. And basically, for instance, Eskom will talk about processes of, procurement, etc. And those processes probably are followed, but it's the trust around what's going on in the background which is really lacking here. And if you zoom out and think that Eskom is paying about 2.5% above the sovereign for its debt, its dollar bond debt, which is the most of any sort of parastatal in a major emerging market, that kind of spread. And there's a reason for that, which is the sort of mistrust that is there from investors. And it's going to take time to heal that. Unfortunately, so far, Eskom is in a better place in terms of balance sheets in the short run because of such low growth, but that trust issue hasn't really been addressed.
Okay, having said all of that, what are you penciling in terms of growth for 2017 for South Africa?
So I was very quick in downgrading after the reshuffle, and I think that was an understanding, having spoken already to corporates, etc., about what their reaction would be. We basically put in a sort of similar investment shock than we saw after Nenegate. That's how we get 0.2% for this year. So basically a little bit weaker, roughly the same as last year. A chance of a technical recession in the middle of the year, but I think the problem for South Africa is this is not a big enough of a shock to sort of force fundamental shifts in how growth and policy is undertaken. There is a core strength to the financial system, certainly to the balance of payments and to the corporate nature of South Africa. But this is not a great number. 0.2 basically implies that the unemployment rate will continue to grind higher and that there won't be job creation, which is the ultimate source, of course, of inequality.
As the year unfolds and as we approach that important conference of the ANC in December, what are investors thinking and how are projections affected as we lead up to that conference?
Well, I think investors are still a little bit too sanguine about the elected conference. Firstly, they have in the back of their minds this sort of Cyril Ramaphosa will win. He must be the best candidate, so he must win. Where in fact, an elected conference has nothing to do with real leadership, policy, or anything like that. It's a raw political power game. And I think investors still have a little bit too much of a benign view on Dlamini Zuma as well. And so investors, I think, are sort of thinking that there is this sort of process of removing Zuma is somehow cathartic and you get a better outcome. And I think that's the wrong diagnosis. I think there has been policy uncertainty, etc., from the leadership at the moment, but the problems are a lot deeper, and problems of economic policy stretch much further back than simply one president.